Just a quick disclaimer before we kick off, guys. ASX trader, myself, and most of the market is an authorized representative of Shareks Australia, and this content is for genuine educational purposes only and does not constitute financial advice. A little bit about me: I've got a Bachelor of Education, Certified Financial Technician through International Federation of Technical Analysis, and Certified Level 1 Analytician as well. But let's get into it, see what the markets are doing. All right, so where we are with the S&P 500 now, we got that move I talked about last week. So remember we were back here and I talked about that we will get a move into the zag zone. Okay, so going back in, I said you click here, you bring it down, and then you draw your little box into your what's called the zag zone or the golden pocket. This is where the high probability resistance will be, anywhere from this 57.50 to thing, and you can see it also aligns with previous support. So this is where buyers are, which will turn into sellers. So fast forward to where we are now, tick tick, and what did it reject? Rejected that exact zone because that's where the resistance was. Now you'll notice that we've come down and we've put in a possible double bottom here as well. So if we get rid of that, we've done that rejection there. We are still within the zag zone going this way. And while we're still in the zag zone going this way, we're technically still good. Okay, so I'm going to make this one green. So right now we're in this kind of no man's land. We're like, okay, are we bearish? Are we going zigzag? We're going to keep going down. Or are we bullish? Zigzag, and we're going to keep going up. All right, so this is where we're in that no man's land. We're kind of waiting to figure it out. From here, what you've noticed is we've come down and bounced off this 618 now twice. However, there are some blinkers on which are called bullish blinkers right now. So the fact that we've come down and price has put in a double bottom. But if you look at OBV, you can see you've got bullish diversions. That's come down on lower in volume. And you've also got it now on RSI. So you've got some good blinkers. So this could be a bottom here. Combine this with what I talked about last week as well, seasonality. We should be bullish moving forward from this date, going off history, going off 100 years of data. Okay, so this is your 4-year election cycle. So election year, markets are typically bullish going into it because they obviously want markets to look good before they get re-elected. New president comes in post-election. So we are typically bearish in this first quarter. But from that first quarter here, you can see March, April right here, we go bullish up until kind of like around August, September. So history says that we're supposed to be bearish in this first quarter, which we just were, and that we're supposed to be bullish now going up to here. Okay, and this is 100 years or so, since 1900. So 100 years of data. Again, this is what's called the 4-year election cycle. There are cycles within cycles within cycles, so don't just think that the market goes like this every single time. There are obviously external factors and things, just like the weather. We have summer, spring, winter, etc. But just because it's summer doesn't mean it's going to be sunny every day. You're going to have other, rains and this whatever happens throughout it. And the market's the same as well. You have other things that can affect it, but this is the average of 100 years. We typically seasonality is around this, and that's all we can do. All we can do is stack the probabilities in our favor. Just like when you go fishing when the fish are biting, because timing wise, that's the time to go because there's more chance of getting fish then, rather than going other times when they're not biting. You're going against seasonality. So that's all we're kind of doing here as well, is we're just going with the good times, going off history, just like when you go fishing, you're going through the good times when the fish are biting as well. It doesn't mean you're guaranteed to catch a fish. Doesn't mean it's going to happen, but the odds are better during that time than at another time. All right, so that is there. So at the moment, bullish blinkers off here. All we need to then see is a change of market structure off here. So if you're, depending on how good of a trader you are, what you could do is come into here and look on the smaller time frame. You see you've had the first SIG, ABC. If we break out above this 56.40, then you've got to change your market structure off here, which is a good thing. You can also see from here, you're getting good increase in volume coming off here as well. So there's a lot of good signs here that I would be looking to go bullish more than bearish right now. And then what we'll see is what happens from there. What this could be is this could be as you see, zig there, A, B, C, and then you can see here 1, 2, 3, 4, 5. So this is your A, B, C. What you could also have here is an A, B, C. Took out the low. Okay, took out the stop losses for people going there. Then what you could get here is a 1, 2, 3, 4, 5. Come up, and so it could be what's called an expanded flat. Then it could roll over. So it could get everyone, on the bullish side. Oh man, I got the bottom on the best. Get it, comes up, gets everyone on the wrong side here, comes up, and then it could roll over. Okay, that's I guess the bearish possibility. The bullish is at the bottom's in. Either way, we should be bullish this week and probably also next week. And that's really the main thing we're looking for, is what's going to make us money this week. So just to explain this move here, I brought this up here. So you can see you've got a downtrend, which is what we had, downtrend. Then you get a 1, 2, 3 wave move. 1, 2, 3. Yeah, flat correction. 3. Then here you got a 1, 2, 3. Then what it does is it takes out the stop there. So same thing here. 1, 2, 3, 4, 5. 1. And then 3. So 1, 2, 3. Took out the low, just like this one. Then you get here 1, 2, 3, 4, 5. So where I think we are is right here, which means we should get a 3, a 4, and a 5. 3, 4, and a 5. Then we'll see if it rejects there, changes, then yes, that's it. And that would be, again, I always think, what would I do? Because if you start putting yourself in their shoes, you'll start realizing why they do what they do. And here, everyone bought the dip of the 618. And this expanded flat is the ultimate scenario, because what it does is it comes down and grabs their stop loss. Then it gets everyone going, oh man, I'm a genius, bullish, it gets them in. Then all of a sudden it rejects and gets everyone off guard because they think they've got the double bottom, So that's the bearish scenario. Like I said, the bullish scenario is that this is the bottom, and we get a double bottom and we come up, we put in a high low, and then we go. Okay, so again, it's not, it's really, you can be right either way. Well, it's not about being right. It's about you've always got to pretend that you're a general going to war. All you can do is use your years of experience in battles to know what the opponent might do. That's all I'm showing you right now. Is I'm a general that's looked at countless amount of charts, tens of thousands of charts. I've seen things play out over and over again where I can take that and I would know, okay, this is what I would do to wreck the most people. And it's all about just being prepared. So if you know, all right, if we go here and the bad guys go left, we're going to do this. But if the bad guys go right, we're going to do this. So it's not about predicting if they go left or right. That's irrelevant. It's about if they go left, how do I capitalize on it? And if they go right, how do I capitalize on it? Once you understand that, you'll make money. Instead of trying to be, oh, I was right, I was wrong. Being right or wrong is completely irrelevant. There's a famous quote that I love, which is there are no bulls or bears in the market. There's only being on the right side of the market. And it's from Jesse Livermore. So here it is here. Jesse, there is only one side of the market, and it's not the bull side or the bear side, but the right side. So you're not trying to be a bull and I nailed it, or a bear and this and that. It's just about being on the right side. Like, what side's going to make you money, or when you're in battle, what side's going to make you win the war? So yeah, as long as you always have that mindset, you'll never have an ego. Okay. And it's egos that will stop you from making money because, you're like, that must be bullish and I must be right. And then you end up just hodling it down to the ground, or that must be bearish, I must be right. And then vice versa. Okay. So it's all about just following the data. You hear me say that all the time. All right. If the data tells you to do something, do it. And then you just act on it. And the biggest mistake people make, people always say, what's one major advice you'd give? And this, again, I've learned from this mistake myself back in the day many, many times, is people will enter a trade or investment on data. Okay, they'll buy it because the technicals changed or the fundamentals were extremely strong, and or there was the macro something, there's some data point as to why they bought it. So they'll enter on data, but they'll exit on emotions. Okay, they'll exit because the market's falling, or they'll exit because they saw a big red candle, not because of a change of the data. Okay, and this is something that Warren Buffett did as a value investor. He doesn't care what the macro environment's doing. He bought that business because it's a good business. So unless the business changes, He bought it on the fundamentals. Unless the fundamentals change, he doesn't care what the price is doing, because he didn't buy it because of a price. He bought it because of a good business. You need to have that same mindset as a technical trader. You bought it because it had a change of market structure or a bullish market structure. Once those technicals are no longer valid, just like if the fundamentals are no longer valid, but that is where you get out. Not because it has a red candle or because it didn't take off as soon as you bought it, things like that. So as soon as your technical reasons for trading it are no longer valid, that is why you exit. And then you exit then, just like you would exit the business if it started to fall to shit as well. Okay, so that'd be big advice for people that are struggling is you enter on data, make sure you exit on data, not on emotions. And one of the things that I did to prepare for that is I would do stuff like Elliott Wave to just map out, well, what are the high probability setups? And to me, I now know, okay, the high probability bearish setup is this. That is going to come up. The other thing it also could do is maybe a running flat where it doesn't take out the high and goes like that. But that's probably least likely, okay? But I'm prepared for it. So, you know, we could just come up to the zag zone here, reject, and then roll over here as well. That's a possibility, okay? So I've said that, you know, we should have a bullish market for the next week or two because of all that. But I'm also prepared that, oh, hang on, what if we do just have, you know, we're not out of this zag zone yet. So what's to say we don't go zag, reject here or 618 and then roll over as well. So I've got to be prepared. It's not my probable setup, but again, I'm not going to get caught off guard because I'm aware that it could happen. I'm aware that it could reject here. And then if it comes back and chain and comes back low, I'm not going to be holding on to this thing going, oh, but I said it was going to go to here. No, because the data told me I was wrong. And actually this one came up. Okay, and this is the thing that you've got to realize. And this is why a lot of people always say, what's your target? And I don't like to give targets because I have targets like I do right now of doing something like this. And that's my high probability target. However, if the data changes along the way, I'm not going to hold on because I said that's the target. Okay, just like when I go outside now and I see the sun shining, I'm not going to grab my umbrella because the data's telling me I don't need it. However, if all of a sudden I start loading up the car and all of a sudden these dark clouds come over and I start feeling some drops of rain, I'm not going to now go, oh no, but it was sunny before, so I'm not going to bring my umbrella. No, the data's changed, so I'm going to bring it. Okay, so you've just got to make sure that you're adaptable and that you're realizing, and if you don't know what I'm talking about, then you should not be trying to time the market, because people that know what they're doing can sometimes not beat the market. So if you've got no idea what you're doing and you just listen to someone on YouTube telling you what to do and you think that you're going to then stop right now. Okay, because education is the key to success. You need to make sure you know what you're doing. You need to make sure you know what you're talking about. And realistically, when you first start learning, you're going to lose money. Okay, I was highly, highly unprofitable in my first year of trading. Again, I didn't have a course or something like Master of the Markets to go to learn from. I was self-taught, but I blew multiple accounts. Okay, multiple accounts learning how to trade. And then my second year, I was still unprofitable, but I at least had some, that was, I think, maybe 1-2 tops blown accounts. So it wasn't as bad. And one of them was I 4 or 5x my whole account. And then I thought I was a god. And then I blew the whole account. I went from being, you know, a 4 to 5x whole account to the whole thing wiped out. And again, I wasn't using correct risk management. So I learned the hard way how to use risk management. So all these kind of things. But anyway, I just was trying to point out that you're not supposed to be good at something. Think about anything you've ever first started when you first learned how to drive. Okay, you didn't rock up and you were a race car driver the minute you jumped in a car. You know, you were a rookie. You were like, I don't know about you, but I was like, man, how do people do this? Because I was driving a manual. How are you supposed to know? How do you know where you fit in between the lines? How am I supposed to do this clutch thing and that? Like, it was just, to me, it was like, man, how do these guys make it look so easy? Now you don't even think about it. Why? Because I've done 10,000 hours. Okay, that skill I have mastered where I don't have to think about it. That's all I've done with trading. I've just charted so many charts and seen that now I've mastered it. So I'm not smarter or better than anyone else. It's just that I've done more time on it. It's really just that I'm stubborn. I haven't given up. Okay. Anyway, let's get into the charts and see what is looking good right now. Okay. So this is the XIJ, which is our information tech, which is our technology index. I got out and went bearish on this one up here on the double top on bearish divergence here, but then also we've had the double top. As you can see, we've had a massive move down. These two little dots are the two areas that I identified for your confluency where we should get a bounce. As you can see, we are on one right now. So the first dot, we've got a nice little bull hammer right here, and we've had a massive move down without any kind of sign of relief. And we've come down there right now, a new low into that on bullish divergence. So right now, and everyone's not looking at it because we've had a big drop and everyone's quite fearful. Okay, so looking at, we should at least get a zag zone bounce here, which is, I'm not expecting it to be a major bottom, but I am expecting it to be at least a decent move up to here kind of thing, which also aligns with my, we should have a nice bullish move for the next at least couple of weeks kind of thing, you know. So major confluency on information, so a bit of risk on. Okay, so risk on is looking to probably bounce here. Same thing with consumer discretionary, which are our wants, not our needs. So, you know, when we've got excess spending, as you can see, we broke out of a rising wedge here. We've broken straight down again. We haven't had a zag zone bounce. So again, I'm looking for that to come up and bounce into this zag zone, probably reject this old prior support as resistance up here as well. So, you know, maybe even a bounce into kind of Mayish, at least kind of mid-April, which, you know, is a good 2 to 4 week kind of run here on some things. You'll hear a lot of people like the crypto bros will be calling major bottoms and stuff like that. It could be as well. But yeah, we're expecting money to roll into the risk on assets for a couple of weeks here. Okay, this is what I had on Bitcoin here. You've had your move up. You've had leading diagonal here into your B wave or wave 2. And then we come up and change here. Okay, so Bitcoin should again have that same move up into that kind of at least mid-April. Then what we'll see is we'll see whether or not we can get through this Fib 500 here, which will also be this major support. So there's a lot of trapped money here that's had 2 chances to get out. Will they get out again? If they don't, good. That could be the bottom. Okay, again, big move down. Going to get at least a B wave correction. Okay, so looking for some of that as well on your Bitcoin. Moving into others, which is your altcoins, same kind of thing. So we've had just massive moves down. So since the top that I got there in December, you know, these alts are down. Ooh, what are they down? 55%. So, and that's, you know, pretty much the index of altcoins. There are some individual altcoins that are down 80+% easy. So big move down. Again, you would expect at least some form of retracement, which, as you can see here, this is what I've done from the week high. We come up here, go through. Again, a move up to this zone here. In particular, where you'll see a major point of confluency is this 618 at 320 zone. See here, you got buyers, 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 buyers. All of this trapped money here, never got a chance to get out. So when we come up and get up to there, that move around there, all these buyers are going to come online. Okay, so easy way to think about how to find trapped money is go back to what happened during that period. So I'll just delete everything. So let's pretend here. Cover isn't valid for the current symbol. Oh, interesting. Okay, anyway, let's just do it without it. So here, pretend this doesn't exist. What was everybody screaming here on that low? A, B, C, bottoms in, we're going to the moon, baby. Buy the dip, we're good. So you can see everyone that was at that point just a healthy zag retracement. Zig, zag. Okay, bought. Oh, yeah. Oh no, we're still good. Oh no, we're still. Oh crap, what happened? Oh crap, what really happened? Oh, now that, you know, so you can see people were buying the dip there because what did they believe? Alt season's around the corner and we're going to keep going. Okay, there's a lot of trapped money there. So all you do is reverse engineer that. Okay, so knowing that there's a lot of people that have bought there because they bought the dip thinking alt season's around the corner, all of those buyers will now possibly get a second chance to get out. Okay, So now you just reverse engineer it and you work back the other way. So bring this down, come around, and know that, and we can make that red for sellers. Okay, we're just going to get it the other way. And then we can also work backwards going, this is our leading diagonal up to here. Click. And we can bring in our fib extension periods. And you can see here, the this is going to be a huge level here, 1.618382. So fib extension combined with the retracement. So old buying. So it may only come to there. Then reject. You can see you've got a big overlay. This period here will be huge. Oop. A lot of confluency right there. And then the last one up here, the 2.618. Okay, so you can see the key levels where you're going to be looking for rejection. So here, here, and here, which is 295 to 298, 317 to 330-ish, and then 350 to 355. They're going to be your key zones that you're looking for a rejection once we clear that. And again, this is all predicting now. We haven't actually got the change of market structure. No, it might go bloop, bloop, and keep coming down. So if we get the change of market structure, which means we get above 245, which I think we will, because again, what I've noticed is that you've got blinkers coming down into here as well. So you'll notice that you've got, so you're coming down on lowerish volume and you've got your bullish divergence here as well. Okay, so coming down into it, blinkers coming in, due for retracement. I'm getting confluency from other risk on assets. So crypto is risk on, information technology is risk on, growth, discretionary. So they're all showing at least a bounce here, which means we should get a bounce here. And again, sentiment's very one-sided. People are defeated. We just printed the worst quarter in crypto in a long time, and the worst first quarter we've had after the ever. So, you know, people are deflated. What have I done? I went all in this halving cycle. We really need to reset it, bring it back in. Halving cycle's back on. Let all the mega bulls start giving shit to the bears again. You're an idiot, and get it then. And then we'll see what happens here when we get up around this zone. If we start clearing this level, then all of a sudden would be mega bullish, because if you look again, everything above there's no trap money. These are all sellers. Selling, 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 selling. All the buying, the first buying happened there, and then after that, it's all down here. So once you cleared 355, you're good to go. So if we can clear 355, then we're going to take the next leg up. Okay, but you know, you might not want to wait till 355. You know, that's where the confirmation happens. So what you can do is you take the entry here, but you just prepared that it could reject anywhere in here. Okay. However, if it keeps going through, oh, hell yeah, I got the change of market structure, I'm in, and then now I'm sitting on good profits and I can keep the profits. But if it rejects here, anywhere in these three levels, then you know to lock in profit. And that's it. Again, there's no bull or bear. It's just being prepared for what's going to happen. And see, right now, everyone's really bearish. I've already set out my plan, because what do you think sentiment will be like when we start getting up here? It will be the opposite. It will be very bullish. But because I've put in my plan now, I'll be exiting on data, not emotions. Because the hardest thing is when you're really greedy, when it gets up here and everyone's calling the bottoms in when alt seasons come in, it's really hard to lock in profit. It was really easy for me to lock in profit here because at Oz CryptoCon on stage, I had shown the key levels before it happened where we could reject on Bitcoin. 108, 125, 145. So when we got to 108, I already knew that was a key zone where we could reject. Once I started seeing all the same blinkers I just showed you there in reverse, I knew to act on that data. And then I also looked at the sentiment. Oh, everyone's really bullish here. President's dropping meme coins. Everyone's streaming to the moon. Perfect. We've got euphoria. Okay, so it's all about combining that sentiment analysis with your technical analysis. And right now, sentiment's really bearish, and we're down on some key technicals as well. All right, so we're at least going to get a bounce here, maybe a bottom. Okay, so for there, once we get above there, I'll follow that data. I'll get back in. I'll get at least some really good trades up until that zag zone. Or best case scenario, I've got a major bottom and we get that excess phase wave 5 right now. and we get a nice little run for the next 3, 4, 5 months, and I get some major gains there. Okay, so it's all about the plan. So going off a couple of trades that I was in, Chalice Mining rejected the zag zone. Okay, so we talked about this, that it doesn't till we cleared 170 multiple times, and we're rejecting. We were buying, we're now not buying. So if you bought this as a trade, what I talked about before, you got in on data right there, change market structure. You should also be getting out on data, which is it rejected the zag zone. They're not buying here. It's gone through. So if you're holding right now, you've got to ask the question, well, are you trading it on the daily or are you investing in it? Because that's a different story. Okay, because investing is you believe undervalued, not holding it for years. But the data right now has shown you that it's rejected the zag zone, and now they're no longer buying off there, and it's rejected zag zone, fallen back through. Okay, so wanted to show you that. So take the stop, 1% loss, live another day. Okay, it's okay to get a flesh wound. It's not okay to lose a leg. All right, so you've got to make sure risk management is key. So CHN there. This one, there's two options on the long-term outlook. Like it's still range bound, as in it's like this is still the accumulation, but we're still accumulating. So we're still in corrective phase. I was hoping that was the beginning of the impulse. But like I said, we needed to break 170 for the first confirmation. We need to get above there for the ultimate. It never came. So that means that we're still corrective. This is a three-wave move, which means it's not the beginning of an impulse, which means that we're still in this corrective structure. And that means that the corrective can then put another leg down, or that it's still corrective and we're still going to fluff around before we take off. I'm still holding in because I've got it in my investment portfolio, but it's now out of my trading portfolio, because trading is all about making money in the short term when it changed market structure. Now that it hasn't, it's gone. However, my investment portfolio is a different story. That's because I believe that it will make money in the next 3 to 5 years. Okay. And that's where I'm looking at the bigger picture. And that's where I would need to have, like I'm looking at the weekly and the monthly. At the moment, it is still bullish market structure. So from that low, we put it high, we put in a higher low, we put in a higher high, and we put in a high. So at the moment, it is still bullish market structure on this one. Okay, so for me to exit this one, it would have to be if it breaks below. So I'd be a bit worried if it broke below here, but ultimately it has to break below that low. Because for me, this is an expanded leading diagonal, which means it's either wave 1, and then this is wave 2, and then we're going, or this is an A, B, C, and then we come down and we're getting that final leg down. So if we're getting that, then yes, I will. And I know that comes if we get lower low, lower high, lower low, change of market structure. We take out that low, because then I know this can't be impulsive here. And then that's it. I exit, and I know that we're going to get another leg down, which probably come down around that 50, 60 cents. All right, but there's a couple of still really good signs, but yeah, it's still fluffing around there. So not in trading account, but in the other ones still. Gold miners are still absolutely flying. Evolution mining here, still taken out. So if you don't know how long has been following me, but as you know, I got in here at the $2 mark on the change there. But on my YouTube just a few months ago here, we talked about it here on the breakout, the $4 mark. You know, you're sitting on nearly double your money now. We're getting quite extended. You'd be expecting some form of probably pullback soon. So when it comes, you probably get some kind of zag, that kind of thing. As you see, big move up. We haven't had a retracement yet. But again, wait for the structure to tell you that. So that one's still looking good. Gore, talked about that one on the breakout of the $2. And yep, so this one's still up. So $2, we're up at $3 now. So you're up 50% on that one. Zig bought off the zag, bounced again. So again, while that's still bullish market structure, hold on that one. L, same thing here, broke out of its beautiful accumulation range here. Yoink, up there and still going. So again, getting a bit extended, so you might get a pullback soon, but ride that market structure, let it keep going. So RL, absolutely killing it on that one. You know, that's up on that breakout from $2, you're up at 4, so you've nearly doubled your money on RL there. and a couple of the silver miners as well. So ARD has broken above here finally, which is good. And we just want to see it stay above now. So off the bounce here, talked about this one, up, up, come down. Now it's got through resistance, support. We just want to make sure it doesn't go below here. That was the change of market structure, the pivot low. Okay, so while above there, she's good. USL has been an absolute beauty. This was one I posted about a few weeks back on Facebook from here. So that one's up from 17 to 26. Nice big move. We, again, haven't had a zag yet. So when it does, you want to just make sure it puts in a higher low and then goes from there as well. But again, that's a leading diagonal, expanded leading diagonal. Now it retraced to the zags, and you can see it's bounced off the 618. This is similar to what the SP500 could be doing now. So you come down double bottom off the bullish divergence and then take. Again, we got to make sure it doesn't do that same thing the expanded flat I talked about, where it takes out the low, takes out the high as an A, B, C, and then a rollover, which is what I talked about here. This. So we got to make sure it's not got dirt, and we're not here right now, because then that could happen. So that's the, again, when you're prepared, you'll never get caught off guard. So all that means is that's your zig. You need to be buying off the zag zone when it comes down. Otherwise, that could be that 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, ABC, expanded flat, and then boom, can come. So don't think it will, just because it's getting really good volume. Like it's not, you know, it's the low probability setup, but when you're prepared, you can never get caught off guard. So I just pulled off zero here just to show you, because we saw information technology is probably going to bounce here. So let's dive into that sector. Zero is one of the better ones. So you can see here, you just got basic trend coming up here. So buying, 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 possibly. So what we're now looking for is want to get a bit of confluency. So from that last retracement here, we'll go up and get our fib retracement. You can see that we're in the zag zone here right now. So 2 points of confluence, you got trend, zag zone. Now what we're going to do is, as you can see, a new low coming down into the trend line. I want to see if there's any bullish divergence lower in volume, that kind of thing. So now I'm going to pull that up, and I can see that very overbought into now bullish divergence. So that's perfect. And we're down here on support of the OBV. Bit of sell pressure, which means I'm probably not looking for this to be a major bottom, but a bounce, which means I can get a good trade off it for the next week or two, which is what I'm saying in technology. So you should get a nice bounce, and then we'll see if it does that. But that move from there to there can be a decent trade. So let's reverse engineer it. Go, okay, is the bottom here off this major support? Let's now unpack it. So we'll go into the hourly here. Okay, same thing. I can see lower in volume, bullish divergence, that kind of thing. So now let's reverse engineer it and go fib retracement from here. Bring it back. And go, okay, here's our zag zone. We should get a nice trade up to here. You know, let's say right now. Change of market structure. We're going to get a move up to, you know, let's say gap fill that zag zone. So up to, it should get a nice move up to the 165, 175 kind of zone. And that's where then you'd be looking for weakness to step up there. In particular, this level here, you can see 382 with that one. So the 165 would be your target. So then you work everything back around that. So you could long it, which is where it is now. Bring it stop loss under the pivot. Take it up to the thing, and you've got a 3.5. So that means I'm risking $1,000 to make $3,500. That's the kind of thing you was looking for, at least a 3-to-1 trade. So that's the kind of thing that you're looking for, confluency, that kind of thing. But before we can go that, we reverse engineer where we could reject. So why won't it get up to 165? Okay, so looking at it now, I like that this was a major support that now turned into a resistance, and now we've changed much. So that's a good sign. We've got back through that trap money. So to me, that's a liquidity grab. Why do you break support? To grab liquidity or to continue the trend. I then reverse engineer that low with our fib zone as well. And I can see that anywhere in here could be the rejection zone. So again, I'm in, stop loss below, but if it does reject, hit the 6 and fall back through here, then all of a sudden, oh, we rejected the zag. My reasons for being in are negated. You know, I'm in because we're off a major confluence zone, like I just showed you. I'm in because we've got to change our market structure through this major support resistance. So if we reject and come back in, no longer do I have bullish market structure. No longer have I broken through this major resistance. No longer is that a liquidity grab. No longer does my data tell me I should be in that trade. See what I'm talking about from before? Or I'm not exiting on emotions, I'm exiting on data, just like I entered on data. Okay, and hopefully you can see why I even looked at zero. Like I haven't even looked at it until this morning, but I saw the info tech. I went, oh, okay, what's a big info tech that I know big money loves? Zero. Oh, it just happens to be on major confluency, just like the index. Oh, it just happens to have blinkers on right there. Okay, so we should at least get that move back. All right, so when you start, people are like, how do you find these stocks? It's just that. So there's 2,000 stocks on the ASX. You can't chart every single one, but find the sector that's looking good, or at least on a major level, then go and find what are the good stocks within that sector, then trade them. All right, guys, hope that helps. Hope you liked the video. Please like and subscribe. Every like, every comment counts, helps the algorithm send out the love and everything. But yeah, take care, everyone, and I will catch you on the next one.